If you filed for bankruptcy or are considering it, there are some really important things you need to know. In today's video, we're diving into how a bankruptcy can negatively impact your credit score and your ability to get credit in the future. This is something I talk about with clients all the time. It's crucial to understand how long a bankruptcy stays on your credit report, what it does to your financial health, and the steps you'll need to take to rebuild your credit afterward. Welcome back to the Credit Corner on Keeping It Real with Credit. I'm Giovanna, and if you're new here, please consider subscribing. Our goal is to give you the tools you need to take control of your credit and finances. Before we jump in, just a quick heads up, I'm not an attorney and this video is not legal advice. If you're considering filing for bankruptcy, it's always best to consult with a bankruptcy attorney so you can fully understand both the short-term and long-term impacts on your credit score, ability to buy a home, get business funding, and more. Now, let's get into one of the biggest myths I hear all the time, that once your debts are discharged in bankruptcy, the accounts included will automatically be deleted from your credit report. While your balances should update to zero, the accounts themselves will remain on your credit report listed as included in bankruptcy, and that comment is what makes those accounts negative.
Oh, okay.
So when it comes to credit repair, whether you're handling disputes on your own or working with a company like ours, it's important to dispute each negative account individually. Just disputing the bankruptcy won't automatically remove the accounts included in it. So for example, if you had charge-offs from Capital One or Discover that were part of your bankruptcy, they're probably still reporting to all three credit bureaus. So you need to dispute each account separately.
Do you understand now?
A lot of people tell me, I only care about removing my bankruptcy. And while I completely understand, I always remind them that removing the bankruptcy won't automatically remove those negative accounts. Each account has to be disputed with both the credit bureaus and the original creditors. So for example, if you're disputing a Capital One charge-off reporting to all three bureaus, you'll need to send disputes to Equifax, Experian, TransUnion, and Capital One. So depending on how many accounts were included in your bankruptcy, the number of disputes can really add up.
Sometimes it's just too much. It's just too stressful.
Also, keep in mind that under the Fair Credit Reporting Act, you need to prove that an item on your credit report is inaccurate, incomplete, or unverifiable in the way it's reporting in order to get it removed. So if an account is reporting accurate, complete, and verifiable information, it's going to stay on your report. Here's a common question I get. Won't my scores go up if the bankruptcy is removed? The answer depends on what else remains on your credit report. If your bankruptcy is removed along with the accounts included in your bankruptcy, your scores could definitely increase. But again, it depends on what else is reporting. If all that's left are positive accounts with a strong payment history, then yes, your scores should improve. But if you have accounts that weren't part of the bankruptcy and they still show negative information like late payments or collections, then your scores may not go up as high because those negatives are still weighing your scores down. Another scenario is when someone only has a bankruptcy and the accounts included in bankruptcy reporting. Once everything is deleted, they expect a 750 credit score, but end up with no score at all. Don't give yourself that much credit. That's because there's no remaining credit history for the FICO algorithm to generate a score. In this case, you'll need to focus on building new positive credit, like getting a secured card or a secured loan to start demonstrating on-time payments and showing you can responsibly manage credit. This is what helps generate a credit score again. Now, here's another myth that surprises people. A dismissed bankruptcy can still show up on your credit report. I've had clients say, my attorney didn't file the paperwork on time, or I decided not to move forward with it. Why is it reporting? Well, as long as you file, the bankruptcy will appear on your report, whether it's dismissed or discharged. And yes, if you file again, that's another entry on your report. So make sure you're ready before moving forward, because even a dismissed bankruptcy will stay on your report and negatively impact your credit. Filing for bankruptcy can cause a significant drop in your credit score, anywhere from 130 to 200 points right after you file. And while your debts may be discharged, that doesn't mean you get a clean slate. Chapter 7 bankruptcies stay on your report for 10 years, and Chapter 13 stays for 7 years. Lenders will still view you as a high-risk borrower during that time.
That's a bummer. Okay.
I also hear from clients, I thought bankruptcy would give me a fresh start, but now I can't even get a credit card. And they're right, it can be tough. It could take months, even up to a year, before you can get approved for any new credit. And when you do, it's usually a secured card or one with a high interest rate. Now, bankruptcy might be a good option for some people, especially if you're struggling to repay debts or being sued by creditors. But this is why speaking with an attorney is key. They'll help you decide if it's the right move for you. If you're hoping to buy a home after bankruptcy, keep in mind that most mortgage lenders have a waiting period after you file. Depending on the type of bankruptcy and mortgage, you could be waiting anywhere from 1 to 4 years. And here's something that often gets overlooked. Even if you manage to get a bankruptcy removed from your credit report, you still have to disclose it to mortgage lenders and title companies. Bankruptcy is public record, so even if it's off your credit report, it can still be found through court records. And no, you can't delete a bankruptcy from Pacer.
It sucks, but we're gonna make the best of it.
The good news is you can rebuild your credit after bankruptcy, but it takes time and a solid strategy. Using secured credit cards, managing payments on time, and keeping your debt low will help. It's not a quick fix, but with patience and consistency, you can recover. I hope today's video cleared up some misconceptions about how bankruptcy affects your credit. If you found this video helpful, hit the like button and subscribe so you don't miss more tips on improving your credit and financial health. If you have any questions or want to learn more about our credit restoration services, schedule a free consultation with one of our credit specialists using the link in the pinned comment below. You can also reach us directly by email or phone. Thanks for watching, and I'll see you in the next video.